July's volatility has set the stage for a critical August transition. We are entering the defining month of the third quarter. Fresh off the late July Federal Reserve meeting, all eyes are locked on whether Chair Kevin Warsh will pave the way for a September rate cut. Between the upcoming jobs report, the CPI print, and the landmark Jackson Hole Symposium, August will determine where global capital flows for the rest of the year. Here is your strategic playbook for August. The macro narrative this month centers on whether the Fed confirms a monetary pivot. After holding rates steady at 3.50% to 3.75% in late July, the Federal Reserve is under intense scrutiny. August 7th delivers the July employment report, followed immediately by the August 12th CPI print. If inflation continues to cool alongside softening economic growth, Chair Warsh will be expected to signal a September rate cut during his keynote address at Jackson Hole from August 27 to 29. A dovish tilt will send the US dollar lower and spark a massive risk-on rally. Gold enters August in a prime technical coil, holding firm near $4,280 an ounce after recovering from its mid-summer pullbacks. The precious metal is building a strong base as real yields begin to ease in anticipation of central bank rate cuts. Immediate support sits at $4,180, a level that institutional buyers aggressively defended throughout July. If macro data confirms economic cooling this month, gold is positioned for a clean breakout past $4,400, reopening the path toward new high-water marks as central bank accumulation remains historically elevated. For equities, August is a month of digest and rotation. As Q2 earnings season wraps up, institutional investors are shifting focus from past quarterly results to forward guidance for the second half of 2026. With August 5th ISM services data giving an updated look at consumer health, companies with heavy debt burdens are facing margin pressures. Smart money is concentrating in cash-rich, high-dividend megacaps and defensive sectors that can outperform regardless of whether economic growth stalls or re-accelerates. In crypto, August is shaping up as a classic accumulation window. Bitcoin has stabilized around $61,200 after absorbing heavy institutional ETF outflows during June and July. On-chain metrics indicate that leverage has been thoroughly cleansed from the system, establishing a firm structural floor between $58,000 and $60,000. If the Fed signals rate cuts at Jackson Hole late in the month, expect global liquidity expectations to shift rapidly, providing the catalyst Bitcoin needs to break out of its summer range. Energy markets continue to provide a crucial disinflationary anchor for global markets. WTI crude oil enters August trading comfortably near $69.50 per barrel. Steady progress in diplomatic channels has kept shipping routes clear, allowing global supply to meet demand without major geopolitical spikes. This sub-$70 oil environment keeps energy-driven inflation in check, giving central banks the exact fundamental backing they need to transition from high rates to policy easing without fearing an immediate commodity surge. That is your August 2026 trading playbook. We stand on the threshold of a major central bank policy shift, with key macro data points lined up before Jackson Hole. Lock these 4 critical dates into your trading calendar. Make sure to save this video, subscribe for our midweek technical breakdowns, and drop a comment below. Do you expect Chair Warsh to announce a September rate cut at Jackson Hole? I'll see you on the trading floor.